Third module is about analysis of statement, financial statement. Third module. In that only we learned about ratio analysis. Then the next module is marginal costing. That is costing. Orientation to cost accounting. Costing. In that we learned about cost sheet and then marginal costing. These two topics we learned there. The next chapter is cash flow statement. No, cash flow is previous one. Cost accounting is last one. Yeah, cost accounting is last, but we are going in this order. We kept this purposefully to the last. Okay, so these are the various chapters. I repeat again: introduction to accounting, in which journal, ledger, trial balance, financial statement, in that profit and loss account and balance sheet, financial statement analysis, in that ratio analysis. Next, cash flow statement. Last fifth chapter is cost accounting. In that two concepts are there. One is cost sheet, another one is marginal costing. Okay, so only left out area is cash flow statement. Towards the end, I'll give you some tips about the exam. Some pointer will be there, no? Morning they used. Yeah. Was it there? Oh, Sarah has taken the laptop. One second, I'll come back. Yes, please. Sir, this pointer or change, a slide changer, one small device will be there, no? Okay, so I could not find. Somebody can help me. Okay. So cash flow statement. It's one of the tools for financial statement analysis. Okay, we have a lot of tools, namely common size statement, comparative statement, trend analysis, percentage analysis, ratio analysis, fund flow statement. In that list, one among them is cash flow statement. Okay. Why do we need cash flow statement? And what is the purpose of this? How do we prepare? What exactly it's about? That's what we're going to discuss today. Thank you. That's what we're going to discuss today. Yeah. So the slide is moving for those who are online. Can you see the slide changing?
Yes, sir.
Yes.
So we are going to discuss about the concept of cash flow, cash and cash equivalents, inflow and outflow of cash flow statement, and we are going to prepare the statement under indirect method only. Okay. Okay. We in accounting, we prepare the accounts based on the accrual base of account. Accrual. What is accrual basis of accounting? Anybody? What is accounting? Sorry? Day to day? So financial transactions are accounting. Recorded in the books of accounts. We are again going back to the first class. That's called account. What is bookkeeping? What is bookkeeping? What you told is bookkeeping or accounting? Bookkeeping. You are telling books of accounts. Meaning you are going to maintain a books of accounts. That's called bookkeeping, you know. So let me please. What does he told me? Same things he told. So is it not a bookkeeping? Recording of business transaction in the books. Is it not a bookkeeping? Analyzing. Summarizing. Yeah, we are slowly getting into one by one. Finally, we can reach the last step. The fully is called accounting. Anyone can tell the full recording? Same thing. Recording of business transaction. Simpler way of what you told. Yes, madam. Process of what? Recording. Only one cannot be processed. No. You're telling it's a process. If it's a process, there should be a sequential steps, no? One after another. Then only we can call that as a process, right? If it is only one, why do we say process? Anybody from online? What is accounting? So all the classes went waste. Is it so? Then what is accounting, please? One reply from those who are online. Recording, summarizing. To summarize, you need some more thing, no? Immediately after recording, can you summarize? In journal, we are recording everything. That's what he told so far. Recording of business transactions. After recording, how do you summarize? Summarizing means you are going to totally everything. Classifying is the next stage. That helps us to summarize. You are not summarizing all. Rent only is summarized. Salary only is summarized. Building only is summarized. We are not summarizing rent, salary, building, everything together. We are not summarizing. So it's a process of recording, classifying, summarizing, analyzing the business transactions which are at least having a financial character. That's what he told to business financial transaction. Okay, anyway, you know that. Fine. Now come to the accrual base of accounting. What is accrual base of accounting? Accrual. What is accrual? Okay. Okay. Yeah. Everybody? Accrual. Accrual base of accounting and cash base of accounting. We have two bases of maintaining the books of accounts. Yes, sir. Okay. Accrual means receivable. Okay, fine. But exactly what is accrual base of accounting? Future expected future transactions are recorded now itself, but not exactly. No, how do you say like that? Suppose a person is going to join next month, his salary, you will write it now only? No, right. That's not accrual. But what you're trying to say, I can understand that concept is accrual, but how do we say accrual? Outstanding and prepaid. Both are recorded. That is what we call it as accrual base of accounting. Prepaid and outstanding. Okay, what is prepaid and outstanding? Suppose salary, you are closing your books of account on 31st March 2022. March month salary you have not paid. You are going to pay in the month of April. Suppose your salary cycle is 10th, but you are counting from 1st to 30th, but you are paying on 10th of every next month. Okay. In that case, 31st March, your 11 month salary were paid. Your employees 11 month salaries were paid. But in the profit and loss account, salary, how much is paid so far, plus how much payable, outstanding. But you did not pay. To find out the total expenses, employee benefit expenses is one of the components of total expense in the format. Okay. So when you calculate employee benefit expense in salary, you will add the March month salary also, even though it is not paid. Suppose you are keeping a bank account in which you are keeping a deposit. You are supposed to receive, you have earned interest on the deposit, but you did not receive because bank policy is to give only in June 30th and 31st December. 6 months once they are going to give you. But you are closing your books of accounts on 31st March. January 1st, you deposited. 3 months, you earned interest on the deposit, but you have not received any cash or you did not receive any credit in your bank account. But you are writing your profit and loss account, you will recognize these 3 months rent interest also in the other income column. Okay. So this concept we call it as accrual base of accounting. If you don't consider these two, only whatever is paid I will consider, sir. Okay, then it is called cash basis of accounting. Suppose you paid in January 12 month rent. Your owner is asking pay rent for 12 months in advance. I mean, every first day of the year, you have to pay the rent of that year. January 1st, you are paying 2022, you are paying 12,000 rupees rent. 31st March 2002, you are closing your books of accounts. How much rent paid now so far? 12,000 paid only on one day. 1st January 2022, you paid the rent 12,000. For how many months? 12 months. Up to 31st December 2022, you need not pay any rent. Again, 1st January 2023, you have to pay the next year rent. Now, you are closing your books on 31st March 2022. How much rent you have to consider as expense in the profit and loss account to compare the income with expenditure, to match income with expenditure? How much you have to consider? If it is accrual base of accounting, you have to consider 3 months. If it is cash base of accounting, you have to consider 12,000. 12,000 what you paid. If it is in the accrual basis, only 3,000. If it is in cash basis, it is 12,000. Cash basis of accounting is having little problem. What problem is there? Current year income, please. Current year income should be compared with current year expenditure only. But in cash basis, it's not possible because how much ever you pay, you are treating that into books of accounts. So that creates some kind of problem. But normally, we people are using accrual base of accounting. That also has some problem. What problem it is? We can't understand how much cash profit available with us because we treat the credit also as a sales. We recognize credit sales also as a part of total sales. Sales is the base from which you minus all the expenditure, right? The P&L account done in the previous classes. Income from operation or income from sales plus other income minus expense. Okay, 12 lakh rupees you sold. You sold goods for 12 lakh rupees, but you did not receive all the 12 lakhs. We can't say you received all the 12 lakhs. Maybe you received, or sometime not possible also. You might have received only 7 lakhs. 5 lakh is going to become in the next coming months. You have given that time period for your customer to pay back the money. Okay, so in that case, we recognize that total 12 lakh as salary. So that does not give me the clear picture about the cash profit of the company or cash flow of the company. Okay, so we need to analyze how the cash flow is happening in the company. Say for example, beginning of the year, what was the cash balance? Closing of the year, what is the cash balance? Suppose there are two companies, company A and company B. Company A has closing balance of cash in the last year, 2021 accounting year, as 10,000. Yeah, same company, closing balance of the accounting year 21-22 is 1 lakh. What's the meaning? 10,000 was there in the beginning of the accounting year, beginning of the current accounting year, or at the end of the previous accounting year. Current accounting year closing balance is 1 lakh. 10 lakh has become 1 lakh. Change is 90,000. Another company, B company, in the same corresponding accounting year. Okay, it was 1 lakh. Now it has become 10,000. Just a reverse case. Okay, one company's opening balance was 10,000 and it has become closing balance as 1 lakh. The other company's other way around, the opening balance was 1 lakh. Now the closing balance is 10,000. Now with these two companies, if you want to take any kind of interpretation, what you will say? Already somebody told. Loss. Somebody told loss. No? Is it loss? Yes? Not loss. Then what it is? Second one, it is a loss. First one, it is a profit. How much profit? 90,000. Second one, how much loss? 90,000. Same answer. First one, how much was profit? 90,000. So I'm a little poor in understanding. So I'm asking again and again. Second one, how much is the loss? 90,000. Anybody would like to contradict with these two students? I hope somebody is there in the online also. Please connect with us, be with us. No, see, we say something, then they will get angry on us. Correct? It's idiotic interpretation, right? Are you getting angry? No. Anybody would like to participate from online? Ladies and gentlemen, those who are online, please bless us by saying something. Get connected. Are you understanding the situation given to you? Yeah. Somebody is telling a company is in profit of 90,000 or better by 90,000. If you want to change that word, second company is little not performing better. It's poor or worst 90,000 something you are telling. Yeah, interpretation. Anybody from online? Anybody would like to contradict with this? He already told it's not profit. They also changed it to the word better or good or poor something. Yeah. Anybody? Are we connected with them? No, normally people will respond, no? Yeah, it's not mute. Some 29 are there. Please, those who are online, anybody can say yes. Are you able to hear me?
Yes, sir. Yes, sir.
Thank you. So would anyone like to contradict or would like to say something on this example so that we can move forward? Is it a very different situation? It's very simple now. I was having in the morning 10,000, evening I have 1 lakh. You are having in the morning 1 lakh rupee, evening you are having only 10,000 rupees, kind of example. Okay, anybody from here? This is contradicting with them. It's not this. It's not comparable, or it's not profit. That's what you say. You said. Anybody? Madam, any idea? You want a company C also? C company. Okay, this is not a data. This is not a data based on which we can say profit or loss. My cash position was 1 lakh. Now my cash position is 10,000. The other company, the opposite. Okay. This does not give me any idea about profit or loss, but my liquidity position, my cash position. How this 1 lakh has become 10,000. 1 lakh is becoming 10,000 or 10,000 is becoming 1 lakh. There is no problem. There is no problem. It can become even zero also. 1 lakh can become zero, 1 lakh can become 5 lakhs, or zero can become 5 lakhs. That's no matter. But what we are concerned about is how and why it has become 10 to 1 or 1 lakh to 10,000. That is not known in any of the statement what we prepared so far. In the balance sheet, you can understand how much is the cash position today. Similarly, if you refer the last year balance sheet, you can come to know the closing balance of last year. 2 points we can understand. But in between these 2 points, 12 months time, no? 12 months time. In between these 2 points, what happened in the company with regard to cash? That is not known anywhere. That's not able to be found out anywhere. For that, we need to devise a system. That system is that mechanism is called cash flow analysis. I want to know what has happened to my cash. As an investor or as a manager or as an owner, I want to know how this change took place. Okay, for that purpose, we are preparing this. You can ask me a question now this time. If you are knowing the subsidiary books, there is one book called cash book. In cash book also, we have opening balance, closing balance. Everything in that accounting year is entered there. Then what is the purpose of having a separate statement of cash flow or cash flow statement? In cash book, we write everything, anything and everything with regard to cash. We don't mind what it is for, but here we want to know how this change is happening, whether the change is good or not to the company. That's what you're going to study. Okay, this is called cash flow analysis. There are some inflows, there are some outflows. Then the difference between inflow and outflow is net cash flow. Okay, we'll study one by one. Okay, by the can you just tell me some examples for the cash inflows and outflows of in a company or in a business? Okay, we can take only one first now. Inflow, can we take? Inflow? Sorry, sir? Yeah, cash received is inflow. Okay, but I'm asking you the examples for that. Please take a note. Have a heading. Have a heading. Have a heading. That is cash inflows. Cash inflows. Cash inflows. Writing is difficult, madam. Writing. No, everybody. Just we'll take a list. Okay. Those are online also. Please note down this list. I'm not giving in the slide, but you are going to do some work after that by having this clarity in the slide. Okay. Cash inflows. You are only going to tell me. We'll add it. If it is wrong, we can refine it and write it. Somebody told here. Cash sales. Cash sale of goods. Or sale of goods for cash. Sale of goods for cash is one of the major cash inflows of a business. Good. What is that, sir? Capital collection. What do you mean by capital collection? Yeah, you mean to say we are talking about from the point of a company. You mean to say issue of shares. We are giving shares to the shareholder. They are giving money to you. Okay, take it. Issue of shares. Issue of shares. By issue of shares, the company can get money. So that's one of the examples for cash inflows. Good. Sir, loan. After we collect money from investor, next is taking loan. Okay. 1 second. 1 second. Raising
Purchase of goods.
One second, madam. 1 second. The third point will write it. Raising of loan from a bank or from financial institution or from any other source. Okay. Raising of loan. 1 second. Somebody was telling. Yeah. Yes, madam. Online. Somebody tried to say something, no?
Purchase of goods through cash.
Purchase of goods. But what's the heading you taken here?
Cash flow.
Yeah, cash inflow. We have taken a heading.
Okay.
Broader heading is cash flow. Under that we have two. No, you only told not two. Inflow and outflow. Now we are talking about only inflows. What you told is outflow. We'll write it that later. Yeah.
Okay.
Interest. Interest on. 1 second. One by one. This madam is telling commission received. Yeah. If you are a trader, if you're a broker, or if you are serving some customer, client, you'll get some commission. Commission received. Very good. Commission received. Okay. Interest on investment. Yes. Next one. Interest on investment. You have deposited some 1 lakh rupee in a bank. The bank is going to give you interest. Yes, that's a receipt for you. 1 second. We'll understand and go. 1 second. Investment. Okay. You may have some licensing from the licensing authority. They will tell you keep this much amount in the bank, then only I'll give you license. There are some business. Yeah, guarantee, something like that. Okay. Even college. If you want to start a college, you have to keep some amount as deposit in a bank. Some fixed deposit. Wait. One by one will go now. I have 3 hours to talk now. If you go like that, we'll finish another 10 minutes. Those who are not understanding, you have to tell them also. Okay. Interest on investments. Maybe a bank investment, bank deposit. Okay. Or any other NBFC, you are having a deposit. In that you are getting interest on investment. Otherwise, return on any investments made. In this case, you are telling interest. But some cases you may have dividend also. Next line, dividend received. Dividend received. You taken some shares from other company. You bought some shares. Your company or our company has purchased some shares of other company. That company is giving some share in their profit to us as an investor, as a shareholder. So we get some dividend received. Something you're telling. Okay, sale of old asset for cash. Sale of old asset / scrap. It can be anything. Okay. Okay, fine. I have not used that asset for last 1 year. It's simply kept. Technology changed. I want to scrap it out. I want to go for upgrading my technology. You can sell it out. Good. Anything else? Advance from company. Which company? Customer. Advance. Possible. 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 Advance received from customer. Possible. Yes. You are a monopolistic trader, or your brand is very much liked by the market. Your commodities are not just available on easy purchase. If you want the goods, you have to place an order and you have to pay in advance. We had some car companies, bike and all in 70s, like that only. Even today, some of the companies. Sorry, sir. Which company? Okay, some companies are like that. But those days, we have only ambassador. We don't have any other cars. Okay. Some new cars are coming in. Okay. New car companies were set up. That time we have to pay in advance. Color we can't select. Nowadays, color, at least some few colors are there. Not at least, many colors are there nowadays. Those days, only one color. Only one color. The days are changing, right? So anyway, advance received from customer. That's one of the cash inflows. Not all these will be there for one company. We are talking about possible cases, probable cases. Yeah. Next. Anybody? What other entity? No, he's telling something. Suppose I am paying your expense. Later you are giving me back. Is it happening? No. Is it really happening? One company is paying expense for other company? Maybe exceptional case. We don't know, but it's not general. So we don't take it. Next one. And that is very, very important one. Whatever all you told is rarest cases. Or maybe exclusive cases. But this is normal. Without this, no business will be there. What is this? Collection from? Huh? Collection from who? No. Collection from debtors. Collection from debtors. Collection from customers. Okay. If you are buying something from supplier and you are asking him also to pay. I take a bike from one company and asking, give me 1 lakh rupee also. That's not good, no. So collection from customers, debtors. Yeah. Next. You sold goods sometime back for a promise. Now they are coming and giving you, or you are collecting from them. That's possible. Collection from debtors. Next. Bills receivable is a paper, actually. It's a paper, no? Bills receivable, promissory note, debenture document, it's all paper, just a paper. It's not any cash receipt or payment. But when the bills receivable give you money, bills discounted will give you. Bills discounted. You are having a bills receivable with you. You are taking that to a bank and you are discounting it. That time you'll get money. Write it. Yeah. In the morning class, they did not tell this. Yeah. Once again, bills discounted. Discounting of a bill. Discounting of a bill of exchange. It will increase. It will increase your bank balance, right? Yeah. Good. Something you are telling, sir? Royalty received. Yes. Royalty or patent. Suppose you are having a formula. You are letting others to use that formula for a price. Okay. Royalty. Suppose you are having piece of land, some 100 acres of land is there near Kolar. You found that there is some gold deposit. You are not able to extract it. What you will do? You will let that land to others for a royalty. That's called royalty. Royalty, patent, and copyright. Copyright is for intellectual, intellectual contribution. Suppose you are authoring a book, you are allowing others to print and sell it. Copyright. They have to give you copyright. Patent means you found out a formula, you found out a mechanism, you found out some process through which a product or service can be made or served. That time you are letting others to use that formula or mechanism. For that they have to pay you some money. That money is called patent. Royalty is letting the property to be used by somebody else. Okay, 100 years you are giving that as a lease. Each and every ton of gold they produce, you have to get some amount, some 1 crore or 2, whatever the price. That's called rent only. Normally rent. It's very simple. Letting out a property for a rent. But that property is not just like another property. It's not a common property. It's a special. What special? Some deposit is there inside. You are not able to extract. You are letting others to extract for 1 ton of extraction. You are getting some money. Okay. So if this nature is there in your company, you will get money. Receipt of royalty, patent, copyright. Okay. Next. Anything else? Rent received. Good. Rent received. Normal property. Rent received. You have some excess facility, you are letting it out and you are receiving rent. Yes. Possible. Anybody? Any other possibilities to receive money for a business organization? Yes. Issue of debentures. Issue of debentures. What do you mean by bond and debenture? Is there one and the same? Yes, it is one and the same. But in India, we use these two different terms. Normally, international usage is bond. Okay. But in India, we use in two different contexts. If government and government company borrows and issues a document, the document is called bond. If private sector companies are borrowing and issuing a document, the document in India is called debenture. In international level, only one word, bond. Government bond, corporate bond, they will use. In India, corporate bonds are called as debentures. Debentures. Okay. So you can write issue of debentures or bonds. It's nothing but borrowing. Borrowing from general public with a promise given in a paper. Deed. Okay. Yes. Anything else? Interest on loan. Interest on loan received or interest on loan paid. So you are a financier. You are giving loan and taking interest. Bank. For bank, it is possible. No? But we are not talking about the specialized institutions. We are talking about in general. Yeah. So normally, no company will receive, interest on loan because it won't give any loan in general. Suppose subsidiary companies are there, they have given. Yes, that's okay, possible. Anything else? Any other possibilities? Okay, if not, we exhausted means you can go to the next one, that is cash outflow. Please quickly. Cash outflow, quickly write out one by one. Immediately you are paying salary, sir. At least let them work for some time now. You are a good owner, but employees are not always good. You wait for them to perform. Purchase of? For that you need money now. Already is there in the inflow? Yeah, many are there. Okay. So purchase of raw material for cash. Purchase of raw material for cash. Just opposite we can write. Whatever is there in the other side, we can write the opposite. Yeah. Interest paid, rent paid, salary paid. What else? Interest paid, already paid now. Interest paid, salary paid, rent paid. That is very good character actually. In the morning class, we never found anybody repaying the loan. He is good gentleman. He is repaying the loan. That's required actually. We found in the morning, we are waiting for that. At final also not come. Then I told Vijay Malia, then they told repayment of loan. So at least you are telling this repayment of loan, good character. Yeah, whatever we borrow, we have to repay. Long-term solvency of the business is based on how timely you are repaying it. Solvency. Payment of interest is liquidity. Are you able to pay interest? That shows your liquidity. Are you able to repay the loan in time? Due date. That shows your long-term solvency. Very good. Repayment of loan. Anything else? Expense is expense. It's a concept. Outstanding expense is a concept. Do you pay any money? No, right? We are talking about cash outflows. There is no flow in outstanding. Asset, purchase of asset. He's talking about purchase of asset. Purchase of asset. Capital goods means asset. Fixed asset. Purchase of fixed asset. Please write fixed asset. Purchase of fixed asset. Land, building, plant, machinery, furniture, etc. Very good. Next. What do you mean by drawings? No. Before that, I should know what is drawing. No. Yes, madam. Okay. In our discussion, do we have any proprietor? Who is proprietor here? No proprietor is here. Then you would ask me a question. Without a proprietor, how a business can be? But you are accepting it. What is this context? He's talking about proprietor. But we are talking about a business which is having a company form of organization. In company form of organization, drawing is not at all possible. You may be Ambani, you can go to your own company, and if you ask any goods, they won't give you. Okay, it's not possible now. Ambani brothers, if there is a business name, you can go and take anything what you want. Nobody is going to question you. Suppose I am having a share in the HDFC Bank. Can I go and ask them, sir, today I need some 10,000 rupees. I already have 1,000 shares in your company. 1,000 shares, today's market value is this. You give me 10,000 rupees, I'll come and give you tomorrow. Will they give? That setup is not there in company form of organization. Owner is separate. Management is separate. Company law. Diverse between, there's a diverse between ownership and management. You are just an outsider. You remember one of the classes I have put shareholder under the outsider, external party, external users of information, something I put. Somebody asked a question. It's based on this. Shareholder cannot take any money from the company. So drawing is no more relevant in company form of organization. Otherwise, in a normal organization, it's a outflow. Outflow. Yeah. Dividend paid. Yes, excellent. Dividend paid. Dividend paid. Please quickly. We don't have time. We have to move a little forward. This is a base for understanding. Dividend paid. Then that's again good point. Payment made to creditors. Payment to creditors. Repayment. Repayment to creditors. Yeah. Bank guarantee, don't confuse. We'll take something else. Normal case we'll take. Yeah. Anything else? Bills payable. Again, I told him it's a paper. It's only a paper now. Are you paying anything? That's what payment to creditors. When bills payable is due, you have to pay money. That's nothing but payment to. Anything else? Think final, one more minute. Any more items? Advance, payment of advance to credit, suppliers. Very good. Advance, 1 second, advance to suppliers. Advance paid to supplier. Yes, madam. It's a concept, madam, actually. Outstanding is a concept. It's not, do you have any money going out or coming in? No. Only one thing is possible, salary paid. If you did not pay, that becomes outstanding. It's a concept only. It's not having any flow of funds. Okay. Anyway, sorry, sir. Okay, all payment, electricity payment, mobile payment, transport payment, rent payment, salary payment, all. Correct, sir? Transport cost paid, telephone cost paid, electricity cost paid, maintenance cost paid, all expenses paid. That's all, simple. Expenses paid. Single umbrella. Expense paid. Yeah, good. Any expenses paid, that's all. Anything else? Okay, now come to this. We already know what is business transaction. We know from business to others. In our example, so many examples you have taken now. From business to others, which can be the example for, okay, we are paying some money to supplier, that others may be a supplier. From others to business, customers to us, business, shareholder to business, we already know what is that, issue of share capital. Okay, business to shareholder, dividend or repayment of capital itself. Some preference share is there, no, that is redeemable. Okay, Then business to creditors, customer to business, already you told here. But if this is separate, then what example you can give for this from business to others? Interest paid to bank can come here. Interest received from bank will come here. From others to business. Okay, if it is taken separately. Okay, next. What is the concept of cash? In cash flow statement, the cash refers to not just hard cash. It refers to cash and cash equivalents. What is cash equivalent? Bank balance, marketable securities value. Okay, so all the things put together we call opening balance. Similarly, at the end we call closing balance. Okay, cash and cash equivalents. Okay, cash equivalent means any securities which are very liquid, which can be readily convertible into cash. Example, equity shares of other companies which you bought and kept it in your name. In your demat account, it is there. In your company's demat account, it is there. Whenever you want, you can sell it. That's all. Okay. Fixed deposit, no. Fixed deposit is not either of this nor of this. Fixed deposit is something different. You can't. But if you want, you can go and demand the money. Sir, it's my money, give me. Yes, banks are going to give you. Finally, they can't stop it's your money. But actually, the very purpose of that deposit is term deposit. In bank, we have two accounts: term accounts, demand accounts. Demand accounts comprise of your current account and savings bank account. Term accounts are comprising of RD and FD, the current deposit. Of course, it's your money. You can get it, but it has some process. It's not like just putting an ATM card and taking your money. That's called SB account and current account. Yeah. Some sound is coming. Okay, inflow and outflow. So we discussed this only so far. Example here, you told business gives cash to others. That's outflow. Example is purchase of stock or any fixed asset, payment of wages or EMI or dividend to the shareholder, redemption of shares. Okay. Then business gets cash from others. That is sale of stock or selling of fixed asset, issue of share capital or debentures or borrowing from banks. Okay. Then what is cash flow statement? Before we discuss this, we have to categorize something we written, no? Inflow and outflow, we have taken a list. According to cash flow statement, we classify the entire business activities into three categories. Look at this classification of cash flows. We have listed out the cash inflows and outflows. Not an exhaustive list, but we have taken many of the cases. Now, such cash inflows or such activities can be classified into three categories: operating, investing, and financing. Now, we have to understand what is operating, what is investing, and what is financing. Then we have to categorize the list what we are having into these three categories. Okay. Okay, right. Look at this. Operating activity is nothing but an activity which is the core activity of a business. Day-to-day activity of a business. Recurring in nature. Example, purchase of goods and sale of goods are the best example for operating activities. And any expenses and income associated with that is called operating activity. Okay. For example, for a college, fees received from students for various programs, BBA, BSc, whatever it is, MBA, income. That is called core activity. Income from operating activity. Suppose we are having some space, Saturday, Sunday, some conference is going to happen in Bangalore. Some people are organizing it, but they don't have place. They're approaching the college and we are okay for letting them to organize the program here. For that, we are collecting some fees. That is not a operating activity. College regular business is not letting out the property and earning money. Similarly, car manufacturing company buying raw material for all the production purpose is called operating activity. Selling the car operating activity. Okay. Suppose they have some plant which is not in use by them. They have some capacity to use, but they're not using it. They're letting that property out for somebody to do the production process. The income received from that is not operating income, operating activity. Okay. Similarly, look at this. Payment of wages, salary for my regular production is operating activity. Next, investing activity means, yes, sir, inventory. Inventory includes three things: no, work in progress, stock in trade, and raw material. Stock in trade, you forget in our financial statement. It's not a final good, it's not a spare part. It's already a final product. You are buying from somebody and you are selling it. Suppose you are a manufacturer of product X. Product Y is also in similar line with X, but which you are not producing. But many of the customer, when they come for buying product X, they also inquire for product Y, but you are not having it. You are not producing it. So instead of disappointing your customer, if you do like that, they will be just going to another company where both are available in the same place. So what do? You don't have capacity of producing Y, but what you are doing, you are buying that as an output from another company. You are keeping it. That's called stock in trade. Trading company will have stock in trade. Manufacturing company will have raw material. If you are both, you will have both. Okay, right. So yeah. Investing activity, it deals with non-current assets. Buying and selling of fixed assets are called as investing activity. Investing activity. You are having money. You are investing means not investing outside. That's also investment activity. But mainly what we will do? Why do we do business? To earn money. How do we earn money? To do some activities. For that, doing that activity, we need some asset. Buying that asset is called cash outflow from investing activity. Selling that asset after using it, you don't want that further to be used. You're scrapping out. That is called inflow from investing activities. Are you able to make sense out of this? Investing, operating. Next one is financing. What is financing? Arranging money for the business. Simple. Will you use no? I'm going for a trip. Will you finance something? I'm buying a car. Will you finance like that? Okay, the financing is nothing but arranging money here. How are you arranging money? By issue of equity share, by issue of preference share, by borrowing money from the bank, by issuing debentures. Okay, so all those things called financing activities, which are concerned about creating long-term capital for the company or creating long-term liability for the company. Increasing or decreasing of long-term liability or capital is called as financing activity. Yes. Current asset. Look at this. In all the cases, in these two cases, we don't talk about current. We talk about non-current. Good point you noticed. The other part of it, the other side of it, what is that? Current. Current item will be used to find out cash flow from operating activity. Current, non-current. All non-current is considered here. Non-current liability in financing, non-current asset is in investing. Apart from non-current, we have one more item called current. It can be current liability or it can be a current asset. Those things will be considered in calculation of amount from or cash from operating activities. I'll tell you how do we do that. Okay. Now come to the cash flow statement. No, not only. Initial investment, what do you mean by initial investment? That wrong notion we have. Capital is not an investment, please understand. But we'll say, how much you will invest? For him, it is investment. For us, it is liability. Capital is a liability or asset? Liability. For business, it is capital. For the businessman, it is investment, asset. For businessman, it is asset. For the business, it is liability. So investment from the businessman point of view, we don't consider here. From the company point of view, suppose X starts a business by investing. Look at the word. By investing means what? For him, it's investing. By investing 1 lakh rupee. That 1 lakh has come to the business. It's called capital. X is capital. X is capital. Now, this one with now you have cash 1 lakh rupee in the business. Business has 1 lakh rupee cash. It goes and buys a piece of land for 50,000 rupees. That 50,000 rupees investment in piece of land is called investing activity. Buying of non-current asset or selling of non-current asset. Buying results in outflow, selling results in inflow. That's all. You got the clarity? Now come to the meaning of cash flow statement. Based on this understanding, we are going to prepare a statement that goes that tells us the opening balance of cash plus or minus these three things. What these three things? Net cash flow from operating activity, net cash flow from financing activity, net cash flow from investment activity. These three. It can be plus or minus. Net means it can be plus or minus. Inflows or more means plus. Outflows or more means minus. Okay. So you are adding these three depending upon the symbol sign. Okay. If you add these three with the opening balance, you will get one amount that is called closing balance. Closing balance of cash and cash equivalents. That should be equal to the balance what you are finding in the balance sheet of the company at the end of the year, end of the current year. Okay. If you do all these things, whatever I told in a statement, that statement is called. Look at this cash flow statement is a statement which shows the sources of cash inflow and uses of cash outflow of the business concern during a particular period of time. The time is 1 year. Inflow and outflows are classified into three: investing, financing, operating. Okay. All the things are same meaning only, but you understood. We leave it. Come to the last paragraph. According to accounting standard 3 or according to Indian accounting standard 7, we have to prepare the cash flow statement. They are telling some guiding principle. Concept is this one only. Concept is, but how do we put it according to the statement that is told in accounting standard 3 previously? But now we follow IFRS. The converged form of IFRS is called as Ind AS. What is IFRS? International Financial Reporting Standard. International Financial Reporting Standard. Why do we need this? Just a kind of NEET exam we are having. Why NEET exam? Why NEET? Somebody is telling no, not required, but government is telling yes, it is required. Still, there is a case pending in the Supreme Court, but still we conduct the exam. What is the need? To have a uniformity. You study in Karnataka, I study in Andhra Pradesh, somebody studies in Gujarat. Now each and every state has their own board of studies, state board, and somebody studies in Central Board of Secondary Education, CBSE. Somebody studying in some international board is there. Many boards are there in the world. Okay, we are confused. If you don't have any board, only white board is there, black board is there, people are happy. But now today we have so many boards. I can't decide where my son should take his primary education. I can't decide. I'm talking too much in the class, but I can't decide it when it comes to my own case. Somebody is telling CBSE is better. ICSE is better because he is from ICSE background. No. Okay. Now confusion is arising. Which board is better board? We don't know. Which board? Silk. This is too much. Blackboard is connected to some education, but silk board. No. Okay. Keep that apart. Come to the concept. That is, we are confused about whom to be selected. One person is coming. The other day I was conducting an interview for my BBA club courses. Out of out he got. Out of out. 100 out of 100. How do we select? You have to select. Definitely no. That's nothing more than that. No. He reached the ceiling. 100 out of 100. We can't reject. Another person is coming. Sir, 99 out of 100. But I am better than that boy. How? His board is Karnataka State Board. My board is International Board. See something. So 99 in International Board is more than the 100 in the State Board. Is claim. Another person, sir, it is not like that. Mine is only 58. out of 100, but I am better than these two. You have to give me the seat. The competition. Example. Some competition is like that. Now I have to select somebody. So I'm bringing one new yardstick. New yardstick. Okay, you can be any board member, I mean, board of education. But I want you to attempt through this. You pass this, then we see who is better. Like that, India is following one accounting standard. UK is following another accounting standard. USA is following another accounting standard. Each and every country follows their own accounting standards. Now I want to select a company from India, but I am living in Europe. I want to know which company is better in India to invest my money. Similarly, there is one more company in China. I want to compare the company which is in China and which is in India, who are in same line of business, to find out which company is better for me to invest my money. That time, he is telling, sir, our accounting standard is very good. So I got only 58 mark. Okay, I mean 58% as profit. Our accounting system is very stringent, sir. Okay, are very liberal. I got 99%. So confusion arises. So we are telling, okay, no problem. Everybody follow one accounting standard. That standard is International Financial Reporting Standard. It's not new. See, wherever you write an exam, alphabets are same, numbers are same, theories are same, all aspects are same. How do you deliver? How do you approach? That differs. Or how, what level you are going, that's differing. Okay. So now I am telling, follow this. If you are okay, if you are going for international financial market, if you want to tap money from international market, follow this. India is following. Okay. But we are not just following, we are just taking it, verifying, checking. We are just checking the applicability of that standard to Indian custom and Indian companies. The converged form of international financial reporting standard is called as IND-AS. There are so many IND-AS 1, 2, 3, 4, 5, 6, 7, up to 40, 42 are there. I'm not sure about it. Some more than 35 are there. Okay. One of them is talking about how to prepare cash flow statement. That is IND-AS 7. Okay. Now, are you having some kind of clarity about this tool called what is it? Cash flow statement, right? Okay, there are two methods to prepare cash flow statement. One is direct method, another one is indirect method. But normally we follow indirect method. Direct method means we don't prepare P&L account and balance sheet. We don't wait for that. We start preparing by taking the cash in the beginning and what all is taking place in the year, and we find out the final cash. That's called direct method, but that is not useful because it's a tool to analyze the company. So first you do your statement. After that you give to me, I will analyze. Okay, that's called indirect method. We are going to follow indirect method only according to IND-AS 7. Only we are going to follow indirect method, and this is called the cash flow statement under direct method format. Okay, since we are not going to prepare this, we don't want to concentrate much on this. We'll go to indirect method. I'll open another file and I'll show you the format of cash flow statement under indirect method. Any doubt up to this? Yeah. I'm sharing a Word file. I hope it is visible for all of you. Is it visible online? Yeah, thank you. So this is the format in which you have to prepare cash flow statement under indirect method. Okay, before we look into this format, what and all we need to prepare cash flow statement? Two balance sheet is required. What two balance sheet? Balance sheet of the current year, balance sheet of previous year. Similarly, we need the profit and loss account of the current year and the previous year, and some more information. If any lack of information is there in the P&L and balance sheet, some clarity is missing, we need to get clarified about that data. If these three are there, two statements and one information. If it is there, we can prepare cash flow statement. Okay. Before looking to this detailed aspect, please forget about, okay, I'll do one thing. I'll just hide this. We are finding out first. I'm sorry. See, we are finding out first cash flow from operating activities, and then cash flow from investing activities, and then cash flow from financing activity. These three put together, added together, plus the opening balance of cash. Look at this. Net opening balance of cash. If you add these four, again repeat it, opening balance of cash and cash equivalents of the company, plus net cash flow from operating activity, plus or minus net cash flow from investing activity, plus or minus net cash flow from financing activity. If you do these three and you add with the first one, that is opening balance, you will get the closing balance of cash and cash equivalents. Okay. Listen carefully. Financing and investing activity, if you want to identify, you have to rely upon balance sheet, because these two are connected to what? That's okay, but one word we learned there: non-current assets and non-current liabilities. Financing activity is concerned about non-current liability and capital. Investment activity is connected to non-current assets. These two will be there in the balance sheet. That's why we have to refer balance sheet to find out these two. Simple example. Last year balance sheet is saying that land and building was 5 lakh. Last year balance sheet you are seeing, in that land and building was 5 lakh. Now current year balance sheet is saying that 15 lakhs. Current year balance sheet is saying that. What is the difference? What is the difference? 10 lakh. Mathematics. Why the difference? Accounting. How much? 10 lakhs. Why the difference is? What could be the reason for the difference? Some printing mistake? No. There may be an addition or what? Can you decode that? What do you mean by addition? The company would have purchased 10 lakh rupees worth of land or building. Okay, then what is the appreciation? Well, if the land is increased, appreciation. Will you record appreciation in the books of account? Yes, really? You remember one concept we studied long back? Concepts and conventions of accounting. Convention of prudence. What does that mean? Convention of prudence. What is the meaning of that? Foresee the losses, don't foresee the profit. Convention of conservatism. Convention of conservatism. It's yours or mine? Yours? Okay. So we don't record the appreciations every now and then. Anybody is working in accounting department? Will you record that? We should not record it. Cost concept. 3 things I'm referring to. See, everything is in the base. Whenever you have a doubt or anything, some confusion is there, then we have to go back to the base. We have to easily refer that. Cost concept. What does cost concept says to us? We have to record the assets only at the cost price, not the market price. I told the same example. In electricity, there is a piece of land, you bought it for 1 crore. But real value for the land is 1.20 crore. How much you will write in the journal entry? What is journal entry first of all? Buying of land for 1 crore. What is the journal entry? Huh? Sorry? Yes, you are right. Please go ahead. Land account debit to cash or bank account. 1 crore. You will write or 1.2 crore you will write. Only 1 crore. Why not 1.2 crore? Cost concept. How much you paid? Sir, I paid only 1 crore. But value of the land is 1.2 crore. Let it be. I don't worry. When I will worry? When I sell it. How much are you going to sell, sir? Sir, I'm going to sell it for 1.5 crore. Negotiation. Then you'll finalize one value. That value will be recorded in sales. Bank account debit 1.3 crore to land account 1.3 crore. Now the difference is called profit. Automatically it's emerging. We don't record it. But appreciation will be recorded only one time. When it is. If the company is getting reorganized, the rights and powers of the shareholders are going to be changed. That time we have to record all the market values. The new balance sheet is going to be constructed. Okay, that's called internal reconstruction of a company. Some sick company or any problem is there in the company, they will be just reorganizing their liabilities and assets. That time they will look for the market value appreciation. And third possibility, exceptional cases, they are allowed to do valuation, revaluation of assets and liabilities. That time they will bring it to picture. Okay, these three are exceptional cases. In general, appreciation will not be recorded, only depreciation will be recorded. Foresee the losses, don't foresee the profit. Prudence concept. Okay. Now, only possibility is the first one you told. The only possibility is addition. Addition. So addition to the asset, addition to the fixed asset. What kind of activity it is? Operating or financing or investing. So we have to go to investment activity heading and you have to write point number A. Purchase of piece of land. How much? 10 lakhs in my example. Minus 10 lakhs because it is outflow. Okay. So for this we can refer only balance sheet. Okay. For which two things, financing and investing. The third one is operating. For operating, you have to refer the P&L account as well as the balance sheet. How do I find out the cash flow from operating activity? Look at this, which I hidden. I'll just open it. Starting point should be profit from profit and loss account. I have to take the profit from profit and loss account and I have to start. Net profit as per profit and loss account. Look at this. Can you imagine the cash flow statement? Cash flow statement consists of only 5 items. One is opening balance of cash and cash equivalents, plus or minus net cash flow from operating activities, plus or minus net cash flow from investment activities, plus or minus net cash flow from financing activities. 4 are added together. What you are getting is fifth one, that is called closing balance of cash and cash equivalents. What you are finding it out, that should match with balance sheet closing balance of cash and cash equivalents of the current year. Okay. For that, there's an explanation here. So how do I find out net cash flow from operating activities? Net cash flow. Look at this. Net cash flow. How do I find out? The starting point is net profit from the profit and loss account. I will take and write it here. And there are some items to be added. There are some items to be minused. Let us understand that after the break. What is the time now? Is it a break time? Yes. So we'll understand this after the break of 5 to 6 minutes. 6 minutes? 15 minutes. 15 minutes is too much. Only 10 minutes. Thank you. See you after the break. Those are online. We are taking a break for 10 minutes. So we are pausing for 10 minutes. We'll join again after 10 minutes. Okay, can we start again? Can we resume? Yes. So before the break, we are talking about the format of this cash flow statement. And I was telling you how to arrive at the net cash flow from operating activities. The rest of the two activities, financing and investment, is easy to refer and write it, but this operating activity is little bit workable. I mean, you have to work out, then you have to find out the operating activities, cash inflow. The starting point for calculating the net cash flow from operating activity is net profit. Net profit you would refer from the profit and loss account and you take as a base. Look at this. We have recorded, we have written here in the format cash flow from operating activities heading. Under that, we are trying to find out the net cash flow from operating activities. Starting is net profit before extraordinary items. That means net profit. Don't worry about that extraordinary item and all. We will be given with net profit in the P&L account, or it will be given a statement. I mean, a paragraph. Yeah, before tax, exactly. Because we are going to minus the tax here. Look at this. Tax paid is minus. Okay. So when you take net profit before tax, we have to do some plus minus. What is the plus minus? I tell you. There are some activity, there are some expenditure, or there are some income which have been included in the profit and loss account, but that is not operating income and operating expenses. It's an income. Suppose interest received. It's an income, but it is not a operating income. Okay, so if you have some doubt, we can go with the expenditure. The items what you have taken. Can you take again? The two lists we have taken now before we go to this. That will give some more clarity. The first one in the cash inflow. What is that? One second, one by one. What is the first one? Sale of goods for cash. Can you categorize it? Which activity it is? Operating activity. Very good. Second one, what is that? What activity it is? Financing activity. That too, financing activity inflow. Third one, loans raised from financial institutions or banking. What is that? Inflow of financing activity. Inflow. Right? Next one, commission received is an example for operating activity. Inflow of operating activity. Next, interest earned on investment. What is that? Interest received, no. Interest received. It is investment activity. Inflow. Next, that is investment. Again, inflow of investment activity. Next, sale of old assets. Inflow of investment activity. Next, advance to from customer. Okay. Inflow of operating activities. Next, commission from cash collected from debtors. Inflow from operating activity. Madam, what is the next one? 1 second, sir. Madam, Mr. Yes. Next item. Next bills discounted is an example for operating activities. Inflow of operating activities. Next, royalty received. Operating activities. Inflow. Next, rent received. For a lodge, for a hotel, it is a, for a normal company, it is cash inflow from investment activity. Issue of debenture or bond is an example for cash inflow of financing activity. Next. Sorry? That's all. Now, next one, list outflow. Purchase of raw materials or goods, stock in trade. Example for cash outflow. All these are cash outflow. Okay, operating activity. Next. Second one, interest paid. What is that? Interest paid is financing activity. All that paid we cannot be same activity. Interest paid is financing activity. Next one, loans repaid. Financing activity. Operating activity. Investment activity. Dividend paid is financing activity. Dividend received is investment activity. Dividend paid is financing activity. Please understand. Yeah. Yeah, dividend paid is financing. Dividend received is investment. Yes, madam. Purchase of fixed asset is investment activity. Yeah, next. Payment to creditor is an example for operating activity. Advance payment to supplier operating. Payment of all operating expenses, operating activity. That's all. Okay, now come to this. So we have taken the net profit. We are going to add non-operating expenses. And also we are going to add non-cash expenditure. It may be an operating expenditure. It may be operating expenditure, but it is not resulting in cash outflow. That also we have to add. Example, depreciation is an example for non-cash operating expenditure. Okay. Dividend paid is a cash expenditure, but it is not a operating expenditure. So if that is there, we have to adjust. That's why written here adjustment for non-cash and non-operating items. First one, suppose in P&L account there was a depreciation for rupees 30,000. The profit, net profit is 1 lakh. Depreciation was 30,000. What is the real profit now? Real cash profit. After minusing depreciation, your profit is 1 lakh. But depreciation is not a cash expenditure. So original profit will be 1 lakh. How much? Net profit you found out in the P&L account is 1 lakh. In that P&L account, you already considered a depreciation of 30,000 rupees, meaning you have taken that as an expenditure, but it is not a cash expenditure. Now, how much is the real profit? 1,30,000, because 30,000 is already minused, but it is not gone anywhere. The money 30,000 has not gone anywhere. So real cash profit should be 1,30,000. So that's why I recommended you to add this depreciation here. Okay. Next item we see amortization. Same logic. Amortization. Amortization is nothing but the reduction in the value of intangible assets. Depreciation is the reduction in the value of tangible assets. That's all. Next, interest expense. In P&L account, you remember, in P&L account, we take an interest as an expense in the name of finance cost. You remember? In the format, finance cost we taken. So all the expense you minus from sales to find out net profit. But interest paid also minused from sales to find out net profit, but interest is not a operating expense. It's a investment expense. Sorry, finance expense. It's a finance item. Okay, financing activity, interest paid. Okay. So already you minused. Now you have to add it to find out the real operating profit. In simple, interest is not an operating expense, but you already minus that from the total income to find out the profit. That profit is not a real profit of operating nature. That profit is already taken into consideration of non-operating, non-operating expense. To be specific telling, it is a finance expense. That also considered. Now we have to remove it out. So removing means what? Adding back. Okay. So if interest is not paid, what should be my profit? That's why I'm adding back. Please understand, interest is compulsory only when if you borrow loan. Otherwise, no. It is your choice of capital structure, whether to borrow money or own capital. Okay, next. Loss on sale of asset. You might have debited into P&L account the loss of sale of asset, loss on sale of asset. But really, the loss on sale of asset is a investment activity. Sale of asset is investment activity, sale of asset. Sale of fixed asset investment activity. A loss arising out of that is also investment activity. That is why we should not consider that, but already in P&L account, they have minused So now we are adding it back. Just opposite of that is profit on sale of asset. What do you mean by profit or loss on sale of asset? 1 lakh worth of book value asset, you are selling it for 1,20,000. The 20 is called profit on sale of asset. Other way around is loss on sale of asset. Okay, that if it is there, that need to be adjusted for. In the given P&L account, if these items were there in the particular year, that need to be adjusted with profit from the company. Next, yeah, non-cash. Yes, not paid through cash means you can't just take the literal meaning of not paid through cash. Suppose you might have paid through check also. Suppose you are not paid check and you are not paid cash also, but you have promised to pay in the future. That will come under this category. Outstanding and prepaid will come under working capital. So then what is non-cash exact meaning? That expenditure nature itself is non-cash. You can't pay it. It's only a book entry. Best example for non-cash expenditure is amortization and depreciation. It's only a mere book entry. Nobody is there to take money from you. You remember, some of you might have studied or you're going to study the next semester, financial management or corporate finance. If you go for a project appraisal, I'm going to buy a taxi, whether it is worth to invest my money in the taxi business or not, if I want to appraise, if I want to evaluate, we have a technique of capital budgeting. You will study in the next semester, or somebody from BCom or BBA might have studied already. Profit from the taxi business, net profit, projecting. It's not done. You are going to buy a taxi and you're going to have a taxi company. Okay. You are projecting your profit in the 2023-24. If you buy 10 taxi, what will be your profit? While doing it, you will minus depreciation first. Then again, the last, after paying tax, please understand, Government of India is allowing you to minus your depreciation to calculate your net profit. Profit is the base for calculating your tax. If you have not minused your depreciation, net profit will be higher, inflated. Finally, you will be ending up in paying more tax. That's why Government of India, Companies Act and Income Tax Act is allowing you to minus depreciation. For that purpose, you are minusing it. But who is taking that money? Nobody is taking that money. That money is in the business itself. That is why we are adding back. In capital budgeting also, free cash flow, when you're calculating cash flow in PV and IRR methods, you'll study. While doing that, we will add back the depreciation. First, sales minus all expenditure, including depreciation, is equal to net profit minus tax, plus again depreciation. That much amount available in the business as profit. Then we'll take the total profit and find out whether investing in taxi business is worth or not. Okay, we'll study later. But now we understand it is the best example for non-cash expenditure. Okay, we have done with adjustment of non-cash and non-operating items. We will get operating profit before working capital changes. What is working capital? The current assets and current liabilities position of the company. Current asset minus current liability is called net working capital. Okay, we already captured non-cash and non-operating in this previous paragraph. Now we are going to consider the working capital changes. Sir, debtor, last year debtor amount was 5 lakhs. Current year the debtor amount is 6 lakhs. What is the reason? What could be the reason? More sales on credit, or we have not recovered the earlier credit sales, the amount. Two possibilities. So that need to be accounted. That's not cash now. It is there in the sales, but it is not coming out from the customer as cash. So we need to adjust for that. Look at this. Increase in current liability and decrease in current asset. Increase in current liability and decrease in current asset need to be added with this amount. What is increase and decrease in current asset and current liability? Just now I give an example. Last year debtor was 5 lakhs. Current year the debtor balance is 6 lakhs. What is it? Increase or decrease? Increase. Increase in what? Current asset. Current asset. That to debtors. What should you do? Increase in current asset. What should you do? You have to minus. Increase in current asset, you have to minus. Decrease in current liability, you have to add. Okay. So these 4 points you have to keep in mind. Increase in current liabilities and decrease in current asset, similar. Increase in current asset and decrease in current liability, similar. That is less. Logic, I'll tell you why it is increase in current liability. Why it is added? Increase in current liability means what? We have kept so much of amount as due. Okay, that's what increase in current liability. What does it mean? Again, if you decode, what does it mean exactly? Our liabilities are increasing. That's okay. See, the amount is not paid. Cash has not gone out. We delayed the payment. Flow is delayed. Outflow is delayed. If outflow is delayed, that amount is with us. That is why we are adding. Okay, if current asset is decreasing means what? If current asset is decreasing, that means current asset is not depreciation, not depreciation. Decrease in current asset, meaning what? Decrease in current asset means, take an example, debtor. Last year it was 4 lakh, current year it is only 1 lakh. What does it mean? 4 was arrear. Now it is only 1 collected. That's why the cash comes in. So we are adding. Cash coming in, no, you have to add, no. Cash comes in, you have to add. That logic. That's why it is written here. Increase in current liability and decrease in current asset to be added. Increase in current assets and decrease in current liability need to be minused. After doing this, you have to minus tax paid. The amount is called cash flow from, net cash flow from. That you forget about. Extraordinary, we here only forget. No, don't worry about that. That itself is called as cash flow from operating activities. Net cash flow from operating activities. Okay. Which one? Where? These two. Decrease in current liability, increase in current asset. Here it is increase in current liability and decrease in current asset. Both are opposite. No. Look at this. Increase in current liability need to be added. Increase in current asset need to be minus. Opposite. Similarly, decrease in current asset need to be added. Increase in current asset need to be minus. Opposite. If you remember any one, the remaining are is easy. Okay. So minus tax is equal to net cash flow from operating activity. Only this is little you have to work. Remaining all you can just refer from the balance sheet. It's not changing. Yeah. So this is fine. Net cash flow from operating activities. I repeat again. Start with net profit before tax, plus or minus non-current, non-cash and non-operating items, maybe expenditure or income. Again, plus or minus net working capital changes, decrease or increase in current assets and current liabilities. If you do that, you will get cash flow from operating activities, this much. Okay, then cash flow from investing activities. Example already told you, sale of fixed asset, purchase of fixed asset. Purchase means minus, sale means plus. Why it is sale plus? Money comes in. You sell something, you are getting money. If you buy something, you are bound to pay money. That's okay. So the net result of this is called net cash flow from investing activity. Now this and the opening balance of cash and cash equivalents. I have not taken there, but you have to take cash and cash equivalents opening balance. How do you know opening balance? Last year balance sheet, closing balance. Okay. Last one, cash flow from financing activities. Refer the balance sheet and take increase or decrease in non-current liabilities. Increase in non-current liability is receipt of cash. So cash inflow. Decrease in non-current liability is payment, is to be minus. Okay. After doing that, you find out the net result. Net plus minus net result you bring to the outer column. That is called net cash flow from financing activity. Look at this. Net cash flow from financing activity. Okay. Net increase or decrease in cash flow. A plus B plus C. A plus B plus C. Okay. Depending upon the symbol. A may be plus, B may be minus, something like that. Next, cash and cash equivalent at the beginning. You can take these here or you can take these in the very first. Both the same. Okay. A plus B plus C plus D or D plus A plus B plus C. Both the same. Okay. After that, if you find out that is going to be your cash and the cash equivalent at the end of the period. This should be equal to the balance in the balance sheet of the current year in the name of cash and bank balance. Okay. If you do so, you can get an idea how the business has generated cash or how the business has spent cash in various 3 activities. Okay. Any doubt in the statement? The statement or in the understanding of cash flow statement? Cash flow concept itself? This about theory. One small question we can work out. One small question we can work out. Yeah, before that, one more time we can revise this. I'm sharing another file. I hope it is visible for those who are online. Yes, is it?
Yes, sir.
Okay. There are some items mentioned over there, just like what you have taken in your list. Okay. We can classify them into 3 categories. Madam, can you tell me the first one? Can you read the question first? Yeah. One second, I'm sorry, I think I closed it. Is it visible? Online?
Yes.
Is it? Yeah, okay. Yeah. Yes, madam. Okay, can you tell me which activity it is? Why? Why can't it be a financing activity? So, yeah, goods are going out, you're getting the money. So, why? Selling of goods is the main activity of a business. That's why it's called operating activity. You are right. Yes, next. Cash paid to suppliers of raw materials. Operating
It
activity.
is not visible, sir.
Not visible?
No,
One second.
sir.
One second. Just a minute. Now?
Now it's okay, sir.
Okay, fine. So second item, second example given here is cash paid to suppliers of raw materials. What activity it is? Operating activity. Third one, cash payment of salaries and wages to employees. Why financing, madam? Operating activity. For our own employee, we are giving salary. What is the purpose of employee? To keep the business in operation. That's why it's called operating activity, cash outflow. Fourth one, investment activity. Fourth one is investment activity. Fifth one, good, financing activity. Sixth one, Financing activity, cash outflow. Seventh one, interest received on investment. Investment activity. Good. Next. Eighth one, interest paid on debenture. Financing activity. Financing activity, cash outflow. Payment of income tax, operating activity. Next. Cash repayment of long-term loan.
Financing activity.
Financing activity. Very good. Financing activity. Okay. Yes. Yes, sir. In doubt? The answer here. Okay. There is a small question. Very small. Just to find out the income from operating activity. Before going to this, I just request you all of you take your mobile and go to any one of the company's website to download the cash flow statement of that company. Better, can we all go to only one company? TVS or ITC, anyone, TVS. All of you please take your mobile, go to Google, search on the data. After that, go to Google and then type cash flow statement of TVS Motors. Try if you're finding the statement. Take 2 minutes time to go through that at a glance. What we have studied and what is there. Just to have a look. Then we'll do this question. Just to have a look. Anybody found out? Is it there available? Yeah. Okay. Is it there? Any changes there? Are you able to find some, connection between what we studied and what is there? So I request you to go through one or two companies' cash flow statement when you are free. Just to go through and try to understand what is a statement and how it is prepared, what you are able to understand from that. Okay. Okay, come back to this slide. I'm sharing another PDF file. Is it visible? Before going to that question, those who are online.
Yes, sir.
I'm sharing a PDF file. Is it visible for you?
No, sir, it's the same. A second. Now it's visible.
Look at this particular diagram. It's a CBSE material on cash flow statement. Okay, 12th standard textbook. You can also download and make use of this for this chapter. Okay, look at this cash inflows and outflows, whatever we have taken so far in the two table, two list. You yourself evolved it, no? The same thing is given over there. Is there any addition? Is there? We'll just check it. Look at this cash inflows, proceeds from sale of goods. We have taken already cash sales, nothing but, and services to customer. If the company is of service industry, service to client. Okay. Then another cash inflow is received from royalties, fees. I think you did not tell this. You told this? Yeah, we take it. Yes, royalties, fees, commission, and other revenues. Okay. Sale of property. You told us sale of asset, sale of fixed asset, sale of property. Example: plant, equipment, long-term investments. I think you did not include that long-term investment sale. You told investment, but disinvestment. I already bought some shares of a company. I'm selling it now. That's called sale of investments, long-term investments. Okay. Then receipt from interest and dividend. We take it. Yes. And then money from issue of preference share and equity share. I think we have taken that first. Proceeds. Proceeds means the value amount from issuance of debts and bonds. Sale of debenture, issue of debenture. Okay. Procurement of loan, we already taken. Raising of loan. They written another word, procurement. Come to outflow, payment of employee benefit expenses. We have taken salary, wage, etc., etc. Everything can be together called employee bonus. Bonus also. Purchase of inventory, we have taken. Pay operating expense, we have taken. Rent, salary, everything. And then payment of tax. We are not included in the list, but we discussed in the previous question. You change your ringtone. Payment of operating expense, payment of tax, purchase of property, equipment, plant, and non-current investments, redemption of preference shares, buyback of own equity share. Buyback of own equity share, we are not done. I mean, company buys its own shares in the open market. Cash outflow from financing activity. Next, redemption of debenture, I mean repayment of debenture, payment of loan also, repayment of loan, payment of dividend and interest. So these are the various items what we discussed. It's given in a picture. I think we are done with theories. It's enough. I think we can do one more question, numericals. Then we can stop. Can you connect this with the statement what you've taken? Look at this. Cash flow from operating, cash flow from investing, cash flow from financing. Put together is net increase or decrease in cash flow. Then adding opening, minusing, closing. I mean, resulting is closing. What's the time now? Half an hour now. 30 is right. We can do one more exercise this. Because one question I thought of asking from this theory, meaning giving you some items like this, what you've taken, and asking you to categorize it into operating, financing, and investing. Okay, that's a little relatively easy. So readable. Purchase of machinery, investment. Quickly, you have to say. The second one. No, second one. This side. Second number. Second. Number 2.
Investment.
Financing. Number 3. So number 2 is financing, sir. Number 2 is financing. Please look at the number. I'm talking about the serial number. Third one, cash revenue from operating. Fourth one, financing. Fifth one is investment. Don't go by the word sale. Sale of what? Sixth one, operating. Seventh one, operating. Eighth one, investment. 9th one, financing. 10th one, operating. 11th one, investment. 12th one, investing activity. Cash paid to supplier, operating. 14th one, interim dividend, financing. 15th one, employee benefit, operating. 16th one, operating. 17th one, investment activity. 18th one, financing. 17th one you're talking about? 17th one, interest received on debenture, what you are having. That means investment activity. You bought debenture, you are getting interest on that. Okay, 19th one, operating. 20, operating. 21, financing. No, investing. 21 is investing. 22, is investing. 22 also investing.
Investing.
23, yeah. 23, operating. 24, operating. 25, financing. 26, this we have not discussed. What is underwriting commission? First you should know what it is, then only you can decide no. Otherwise it's random decision. First you should know what is underwriting. What is underwriting? There are two places we'll use underwriting in finance. One is in insurance. If you apply for insurance policy, there will be an underwriter. They will go through your proposal and they'll check your health condition. They will give yes or no to give a policy on your life. That's one thing called underwriting. Anybody is working in insurance companies? Nobody? Okay, that's one type. Another underwriting is while selling the shares to the public, we need a guarantee that I can sell all these shares to the public. No guarantee is there for me. Suppose LIC has come out with an IPO last week. Okay, LIC does not know how many shares can be subscribed by the public. Why should I know? There is a minimum requirement by SEBI. Minimum 90% of the shares what you are ready to sell should be purchased by the public. Otherwise, you cannot allot the shares. You have to return your money and you have to go for one more time IPO. That's a very, very bad impression on the company. No company wants to take that kind of risk. Just like writing an exam, failing, and again writing an exam. No student is interested in that. Sometime it may happen, but not intentionally interested. To avoid that, what is a guarantee? I am just telling somebody, I'll give you a commission. You sell my share. If not sold, you take it. The person who is doing this is called underwriter. What he is doing is called underwriting. I have to give commission for him for doing that work. Say, for example, I am issuing 1 lakh equity share. I am finding 5 members, 5 auditors, or 5 companies, or 5 brokers, whoever it may be, who is doing this job of underwriting. I'll find them. So 20,000 shares each. You please take care. So all these 5 members will actively play in the market to market my equity shares, to sell my equity shares. How do I know? They will be marking in the application through whom that shares were sold. They'll put one stamp in the normal physical form of selling of shares. But today it is routed through their account. The company will know how many shares were sold by. Now, finally, Mr. A sold only 18, Mr. B sold 19, Mr. C sold all the 20. Like that is there. The remaining shares they have to take. First person has to take 2,000. Second one has to take 1,000. Third one, no. Fourth one, depending upon how many shares he sold. For this process, for this help, for this service, I have to pay some commission to these underwriters. That is called underwriting commission. Now you tell me what activity it is. Financing activity. Financing activity. Next one, operating investment activity. Investment activity. Bank overdraft is a financing. Is it so? Bank overdraft is not a financing activity. It is a not a operating activity. It is a Not an investment activity, sir. It's a current liability, no? It's a current liability. No, it won't come under any category of this. Have you come across any current liability or current asset in these three activities? Financing and investment talks about non-current assets and liabilities. Operating is considering to find out the cash flow, the working capital management. I mean, current liability and asset, but it is not an activity of operating. Okay, next. Is it hiding you? Yeah. Which point it is? I'm sorry, I think I went somewhere. Yeah. So overdraft is the current liability. Okay, next. Yeah. No, don't say it's not. It is considered while calculating operating cash inflow. Plus or minus. Increase in overdraft or depending upon that minus or plus current asset, sorry, current liability. Okay, but it is not an exclusive item of either operating or investing or finance. Yes. Next. One second, madam. No, in this question, you have to say it is not included in any of the three. It is excluded. You are right. But don't keep in mind, it is excluded in preparation of cash flow statement. There you have to consider. Next. Brokerage paid on. Okay, 31. Here's this one. 30, no, it's there. Cash credit. Similar to overdraft. Next, marketable security. Similar to overdraft. That's a current asset, no. These two are current liability, this is current asset. Next one, 31. That's a current asset. Refund of income tax. Operating. Since you consider payment of income tax as operating, you have to consider this also operating. Okay. Fine, I think this is about theory. Sorry, madam. Investment activity. Asset 1 lakh, commission paid 10,000. Entry is asset account debit 1,10,000 to cash account 1,10,000. In that way, it's investment activity. Okay, enough for this theory and understanding of these activities. We will do one small question. Yeah, I told you only indirect method, no? This format already we discussed. Okay. Take this question, illustration number 2. Okay, let's talking about illustration number 1 again. Yeah. Preparation of cash flow statement. Look at this illustration number 7. Balance sheet is given for 2 years. Can you see? Yeah, 15 and 14, previous year and current year. Okay, balance sheet is there for 2 years, and the notes to accounts also there for 2 years. During the year, equipment costing rupees 80,000 was purchased. Loss on sale of equipment amounted to 5,000. Depreciation is 15,000 and rupees 3,000 charged on equipment. Okay. Sorry. Nothing. If you say we also get happiness, no. No, non-disclosable happiness. Okay, keep it with you. Come to this. I'll give you 1 minute time. Quickly go through this question. Keep remembering the data. For us, it will helpful for solving it. Along with you, I'll also read it. Please go through this. Some liabilities are given. Capital is given. Current liabilities are there. Total asset. That is current asset and non-current assets are there. Then some more notes to accounts. Okay, notes to accounts are there. And some information, or in accounting language, adjustment, right? So this is what we call it as adjustment. some information about the company, the data. Okay. So from this, you have to prepare the cash flow statement, full-fledged statement. Okay. Now the starting point is cash flow from operating activities. We are going to add that opening balance in the fourth one. Starting point is not there. Fourth one, we can A, B, C plus D to find out E. Right. So to find out the operating activity, what is the first starting point? Net profit. So I have taken the net profit. Look at the question. Net profit before tax is given 2,70,000. How do I know? Go to the question. Okay. Working note regarding the profit. Yeah, surplus. Look at this. Profit and loss is given 350 and 2. 2 lakh was the profit. Now it is 3,50,000. So what's the difference? What's the difference? 1.5, but any other adjustment is there? Look at the tax paid or something. Share capital is there, resource and surplus. Resource and surplus adjustment, you see anything is there? Point number 1, yeah. Balance in statement of profit and loss, 3 lakh and 2 lakh. Only that much is there. Sorry? 2 lakh is for the previous year and 3,50,000 is for current year. So total is, the difference is 1,50,000, but here it is taken 2,70,000. Where from you taken 2,70,000?
For preparation of taxation, 1.2 lakhs.
Payment of tax, how much? One second. Payment of tax, how much?
1.2 lakhs.
Where it is? Provision for tax, where it is?
Taxation.
Third one, yeah, provision for tax, how much it is? How? How it is 1,20,000? That 1,20,000 is for short-term provision. Only tax is how much? Current year it's only 50,000. So what was the difference in the? Look at the difference between the profit of last year and current year. 1,50,000 is the difference. 1,50,000. If you add this tax is how much? Tax is 50. So total is going to be 2 lakhs. Any more 70? Is there any extraordinary item? Dividend? Yeah, dividend, yes. There's a dividend. Proposed dividend was there. It was minus from the appropriation. You remember appropriation from the net profit will minus the dividend. So total is 2,70,000. Net profit before tax and extraordinary item 2,70,000. It is given here notes. Look at this. Yeah. Whatever we discussed so far, it is there in the working note. Profit difference is 2 lakh and 1,50,000. 50 is the tax, 70 is the dividend. So I got 2,70,000. That explanation is given here. Based on that, we have taken this 2,70,000 in the statement. How do I close this? Huh? Website here.
So there is an arrow mark. You can just click on it. Here in the beginning, left. There is arrow mark here, left again.
Please come, sir.
Little left. Yeah.
Thank you. Okay, so 2,70,000 is the starting point. Okay, with that you have to add or minus the non-operating, non-cash items, maybe expense or income. Look at this question. There was a depreciation given in the adjustment, 15,000 plus 3,000. 15,000 is the depreciation on equipment and 3,000 is the depreciation on furniture. So we have taken that depreciation on equipment 15. Depreciation on furniture, it is 30 or 3? 3,000 only. Okay, 3,000. But here it is. Okay, furniture is not given here. It's given now. Maybe it's a printing mistake. If it is 3, you take 3. If it is 30, you take 30. That's all. Okay. Now, patent written off. How do you know patent written off? Go to the balance sheet. In balance sheet, intangible asset is there now. Note number 5. Go to note number 5. Intangible asset. This is note number 5. Intangible asset. Patent last year it was 1 lakh. Current year it is 95. How much difference? 5,000 difference. So we taken here 5,000. Patent written off. Amortization. Nothing but amortization. Okay. Next, loss on sale of equipment. How do I find out? If it is given, I can take. Otherwise, I have to find it out. It is given here or not? Check it. Yeah, loss on sale of equipment. 5,000 I have taken here. If it is not given 5,000 rupees loss on equipment, you have to prepare one rough ledger account of equipment. Opening balance, debit side. Closing balance, credit side. The difference between these two should be either depreciation or sale or purchase. If it is reduced, two chances. One is depreciation and sale. If it is increased, again, two chances, appreciation and purchase. But we don't record appreciation, so we forget appreciation, only sale. Okay. So in this question, it is given here. We are taking that as writing of, sorry, loss on sale of equipment, 5,000. So that's all. Operating profit before working capital changes. Take this 2,70,000 plus 30 plus 15 plus 5 plus 5. How much? 3,25,000? Yes. 35, 40, 55. So 325. Now operating profit before working capital changes taken. Now we have to record or you have to consider the change in working capital. How do I know change in working capital? Go to balance sheet. Current liabilities and current assets will be there. Compare that two between previous year and current year and find out the difference. That's all. I'm going to liability side. Look at this. Trade payable last year. Please don't go by the column first year, second year. Read the previous year or current year or the number of years. I mean, name of the year. Okay. So 14 is the last year, 15 is the current year. Trade payable increased or decreased? Decreased from 50 to 45. Decrease in current liability. Keep in mind. Next one, other current liability, that is outstanding rent. Other current liability, that is outstanding rent, is increased. Increased now from 5 to 7. 2,000 increase. Increase in current liability. Next one, provision is increased or decreased? Increased by 40,000. Similarly, current asset, you see, inventory increased, trade receivable increased from 80 to 120. Cash we should not touch because that is going to be D and E. Fourth one and fifth one, the statement. Okay. So now come to the statement, cash flow statement. Decrease in trade payable 5,000 minus increase in outstanding rent plus 2,000. Increase in trade receivable minus 40,000. Increase in inventory minus 80,000. The total is 2,02,000. How it is 2,02,000? 3,25,000 plus or minus of all these things, as the case may be. So it is 2,02,000. That's called cash generated or cash flow from the operating activity minus tax paid. What's the tax paid? 30,000. So it's going to be 1,72,000 is the net cash flow from operating activities. Similarly, come to the next one, cash flow from investing activity. To know the investment activity, what should I refer? Balance sheet again, asset side. Go to asset side, non-current asset. Look at this, intangible asset. 95 to 1, sorry, 1 lakh to 95. Tangible asset, 5 to 5. Only one is, B is increasing. 0 was there and it is now 1 lakh. A and B, I mean, under A, 1 and 2 are same. There is no change. Amortization already taken. Goodwill written off. We've taken that 5,000. Okay, from 1 lakh to 95. That 5 was considered for amortization. We minus that. And then tangible asset was 5 lakh. Now also it is 5 lakh. So there is no change. Next, non-current investment was 0 in the last year. Now it is 1 lakh. So there is an investment made. So it's inflow or outflow? Outflow. So we're writing in cash flow statement. Cash flow from investing activity. Purchase of investment 1 lakh. Look at this. This 1 lakh is there. Okay. These two we have to find out by preparing a small ledger account. How I tell you. Look at the equipment. Equipment. In the working note, you can find out equipment. Yeah, equipment. Yeah, equipment was 2 lakh. Now it is 2 lakh 30. There was a depreciation on equipment. How much? 15,000? 15,000. Equipment was how much? 2 lakhs. 2 lakhs minus 15 is should be 185. But it is 230. How much the difference? So that should be the purchase of equipment. But is there any other adjustment in equipment? Look at this equipment account we prepare to avoid that confusion. Opening balance was 2,000 written here. Sorry, 2 lakh it is written here. Closing balance is 2 lakh 30 it is written here. Okay. The depreciation is written there 15,000. Yeah. Loss on sale of equipment was there. No. How much was it? Is 5,000. That is written here. 5,000. Okay. Is there any purchase of equipment? 80,000. Purchase of equipment written here. Now the difference should be 0. If there is any difference is there, that should be either purchase or sale. In this question, sale it is because there's a loss on sale. So we should know how much it is sold. That is nothing but 30,000 rupees. Look at this. In this side, it is written bank account. No, bank account is nothing but sale of equipment. What's the entry will make? Bank account debit to equipment account. If you sell, we don't know the amount of how much it's sold. For that only we prepare this ledger account. Debit side, opening balance, purchase, profit on sales. Credit side, depreciation, sales, and closing balance. Okay, there is only one amount different, that is 30,000. So I've taken that 30 as purchase. You write it here in bracket, bank account within bracket, purchase of equipment. Come to the statement, write 30,000. It is written 30,000 here. Okay, 80,000 is purchase, 30,000 is sales. Next, only 3 items are there. So net result is 1 lakh 50 minus 1 lakh minus 80 plus 50. Total is equal to minus 150. The last one, cash flow from financing activity. To know the financing activity, what should I check? Balance sheet again, non-current liabilities. Go to balance sheet. Yeah, non-current liabilities, shareholder fund, share capital. Last year it was 5 lakh. Now it is 7 lakh. So what is this? 2 lakh is difference. What is that? Issue of new share capital. So where should I go? In cash flow statement, under financing activity, I have to write point number 1. What is that? Point number 1 should be issue of new equity share capital 2 lakhs. 2 lakhs no difference. 2 lakhs. Next, repayment of bank loan. How do I know repayment of bank loan is there? Go to liability, non-current liability, bank loan. Previously it was 1 lakh. Now it is 50,000. Meaning I might have paid 50,000. That 50,000 is recorded here. Payment no. Payment means minus. While writing the amount, please be careful. Payment outflow means minus in bracket. Next, dividend we paid no. Proposed dividend 50,000. We already discussed no. So the net result is 2 lakh minus 50 minus 1. Sorry, minus 50 minus 50, 1 lakh. So now A, B, C are Roman letter 1, 2, 3. How much? This is 1 lakh. Previously it is 1 lakh 50. Sorry, not. Yeah, minus 1 lakh 50. Previously it is 1 lakh 72. So 1 lakh 72 minus 1 lakh 50 is equal to 22. Plus 1 lakh. So 1 lakh 22 is written here. 1 lakh 22. Now you add the opening balance of cash balance. Go to the balance sheet, check it. Yeah, cash and cash equivalent 2 lakh 5,000. Look at this. 2 lakh 5,000. You bring it here, 2 lakh 5,000. Yeah, 2 lakh 5,000. Total should be 3 lakh 27. Go to the balance sheet and check it. Is it correct or not? 3 lakh 20,000. Okay. So this is how you have to make cash flow statement. So please download the same textbook from the NCERT website and go through few more questions. We don't have much time. Okay, today's the last class. So with this, we can conclude the normal discussion on the subject. What's the time now? 4:30. Okay, so before 1 minute, it's only 4:29 showing. So before 1 minute or on time, we completed all the portions. Any portions are left out? I climb, it is completed. If anybody's have any doubts or this is there in the course plan or in the syllabus, but we have not heard any on this. If it is there, please tell me. Otherwise, the next agenda for another 5 minutes is tips on examination. Tips on examination. That sounds better. That sounds better. Important question. Does not sound good. Okay. Yes. It's very easy to find out the tips on the exam because the portion is very small. The question should be covered all the portions for 100 marks. So normally you'll find all the questions from all the chapters. That's simple open secret. Section C, 45 marks, 3 questions are there. Case study we call. Okay. In our case, everything is a case only. This is one small case what we discussed so far. The balance sheet is a big case. Okay. Suppose, for example, what I say after that, it's a case. Like not like in your other subject, you will have some small caselet narrating about some situation, something. We are discussing everything about some situation only. Okay. So in that manner, case study. 1, 2, 3. 3 questions are there. 3 independent questions. 3 independent questions. Probably cash flow, P&L account and balance sheet. That's financial statement. Ratio analysis. Probably. Okay. All the 3. That's what case study. Compulsory questions. Some? No. We will give you some question. I mean, balance sheet. Yeah, balance sheet will be given to you. For the balance sheet, ratios. Cash flow or something similar. Balance sheet, just like this. Balance sheet will be given to you. Yes. Yeah, like this data, you have to prepare. Assignment is something vast, that is, you are having time. So question also on you, answer also from you. So that kind of burden may not be there in the exam. Okay. I'm not telling it is not there. May not be there in the exam. Okay. Yeah. Next one. So 3 things: ratio, financial statement, and cash flow. 3 for the case study. Okay. Come to the section B. Section B, we have to have 6 or 5 questions to be there. Out of that, you have to answer 4, I think. Yeah. You have to write 2 theories, 2 questions, 2 numericals, 2 plus 2. But 5 will be there. Okay. 2 theory, 3 problems. Yeah, 5 will be there. You can choose 2 plus 2. 2 theory, 2 practical. Or sir, I am good in practical. 3 practical, 1 theory. We should not deny that opportunity for the accounting students. So in that category. Okay. Somebody please take note of it very carefully and send it to me also. Okay. So next, out of that 5, what we can plan? 1 from the first unit. 1 from the first unit, 10 mark. That is journal entry or some theory question in that first module. Principles of accounting, concepts of accounting, something like that, or users of accounting information. Then second module, P&L account. Already it went into case study. I may not be asking again the full-fledged P&L account and balance sheet. Maybe if at all, given either balance sheet or P&L account from the trial balance. Yeah. I told no, either journal or on theory. Okay, that's first unit. Second unit is this one. Which one? Either balance sheet or trial balance. So if you prepare for financial statement, you are assured with 25 marks. One is there in the 15 mark, another one is there in the 10 mark. Either balance sheet or P&L. There it is going to be together. Okay. Now three questions over. Cost sheet. Because ratio already went into 15 marker. Okay. So cost sheet. Preparation of cost sheet. Another one is marginal costing. Marginal costing. How many questions are there in B? 4. 5 are there? If you take journal plus theory, it's 5, I think. Yeah. Okay. Which chapter we left? Yeah. In ratio analysis, question was asked in section C. So one theory can be asked in section B, 10 marker. Yeah. Uses of ratio analysis, or what are the tools available for financial statement analysis? Okay, or to test the solvency of the company, what are the ratios will you consider, explain? Like that. Theory. Okay. I think 5 questions are over in that. Section A, 5 questions should be there. You have to answer for 3 questions. 5 questions are there. Each unit one question. Tools used for analyzing the financial statement. That's one question. Another question may be of use. I mean, what are the ratios will you just example? I'm telling you. Theory question from ratios. What are the ratios will you use? Do you use for analyzing the solvency of the company, profitability of the company, liquidity of the company, efficiency of the company? Only 4 are there. Anyone that character, that nature, that type. Okay. Section A is very simple. 5 questions to be there in the question paper. You have to answer for 3. We have 5 chapters. One question from each chapter. One question from each chapter, which is not there in the 10 marker. Now it is known what question to be there in the 5 marker. Okay. Please help me in this. Just to send it picture or something, or you coordinate with me before I finalize. Okay. Fine. So this is about the semester on accounting for managers. Okay. Any questions? Hereafter, we are not going to meet formally for this purpose, for this course called accounting for manager. So if you have any doubt, anything to say, anything to ask from me and to me, please do that now. We can spend another few minutes if it is required. I think today is the day where we have more strength in the class. Huh? No? Previously, some days we had more than this number. Fine. Less. Okay. But anyway, it's done. Okay. So please, a few more points on examination. Don't. Yes. Few more minutes. Yes. Don't leave any question unanswered except the choice questions. 100 marks, you write it. Sir, I don't know this question. I attempted only for 85. The reduction in your attempt is resulting in increase in your probability of failing. You have to come to Bangalore. After that, you have to see the place. So I did not see any place in Bangalore. No matter. You have to come first. You have to attempt. Then only I can give some mark. Suppose you are 38. How much you have to get out of 100? You can get out of 100 also. How much you have to get passing? No, we worry about only maximum mark. It is you to worry about what is the minimum mark. What is the minimum mark to be get? 40. 40 out of 100. I think so. Check it with the office. Okay, if you are getting 39, if 40 is the minimum, there should be some space to give 1 mark. Then only I can give 1 mark. If you're not attempted, suppose you attempted only for 50, you are 78% right. That means it will result in 39. Next question you are not written at all. 50% you just left. So what we will do is we will cut another 5 mark and will create you to be 34. That's all. Because you did not attempt, you yourself is not interested in passing. That's why. That's what the message I will get from that paper. So please, my request to all of you is, my appeal to all of you is, attempt all the questions for 100 marks. Okay, reasonably you read it, prepare. If you attended the class, if you're going to revise the classes, what you've done in the video or the audio, whatever is recorded, from that you can get all the points. Whatever we discuss in the class, go through. Minimum 4 questions on each chapter. Suppose if it is cost sheet, 4 questions you should be manually doing it. Okay, balance sheet, you have to do 4 questions minimum. From any textbook, from any, yes, one more point. I did not tell to another class. Balance sheet, and it's only for BCom student, BBA student. Those who claim that debit and credit. Please understand, whatever is discussed in the class, that format should be there in the answer sheet. In balance sheet and profit and loss account, if your teacher might have taught in some other format in your class, that is not there in our course. T form is not there. Account form of P&L account, you should not prepare. Even the answer is exactly correct with our format also, I won't give you mark, I'll give you only 0. If you are not learning in the class, no matter. Everybody cannot learn. But you are bringing something what you already learned and telling me that is correct means I won't give you mark. Please understand, especially balance sheet, only balance sheet and the P&L account. It should be in the format what we discussed in the class. Statement format, just it is in the screen. This format should be there for balance sheet. Okay, it should not be there in the T format. That one point. Another one is just write the question number very clearly in the margin. Many of the time what happens, at least last 2 times, you are all writing exam in the online, so-called online exam. It's very boring to correct your papers. Not able to judge what you have written. 8 is looking like 0, 0 is looking at 10. So many confusion. You are scanning and uploading. Somebody will scan upside down, downside up. How do we read? I think that is not there in this time at least. But in regular time, what is happening? The question number, suppose question number is 8. In the middle of the paper center, you write one rectangle, draw one rectangle. Under that, you can write some bold, little bigger font size. You can write Q number or QN or simply number 9 or 10, legibly to be readable. Your 1 should be looking like 1 only. Somebody has handwriting. Please exercise that in some other exam, not in accounts exam. Number is important here. Question number to be very clearly known to me. It's not known to you, that's okay. Otherwise, I can't give the mark. Question number. Sir, this is small thing. Why do you say? You are all in different profession. Now you are all doing something else. You are not writing exam regularly. So it should be told to you. Otherwise, it creates confusion later. You are not going to get back the paper and see, sir, this question you did not give me mark. The chance is not given to you now. So you have to make myself very clear to give you marks. One thing. One question, another question, please leave some gap or draw one line. Otherwise, I may think 5 marker question, 2 question, I'll give only 4 and I'll go to the next question. But you might have written 2 questions nearby. 1 paragraph at least should be there for 5 marker, minimum 1 paragraph. If it is 10 marker, please write some bullet point and explain it. Many of you, what are doing, what you will do means your seniors writing the bullet points 1, 2, 3, 4, 5 over. Sorry, 5 marker, 5 points written. That's okay, no problem. At least without explanation. But 10 marker also, if you do like that, you won't get mark from me. Okay, you will see me after 2 days in your assignment marks. From that, you can judge how SAR is going to give mark. Okay, so I'm little strict, or you can say any other words in your language. Mark is having some value. Mark is not just a number in exam. But after you get the mark, mark is going to be just a number. That I believe. But in exam, it's not just a number. It is having some value. So please write some space, leave some space for one question to another question. Little reasonable elaboration, explanation to be given for all the points. Suppose 10 marker, you listed out all the points, no problem. Explain minimum 4 points. For the listing of the points, 2 mark, 4 points, 4 into 2, 8 marks. So totally it can be 10 marks. Like that, you imagine, you just think it of. And again, decide the length of the answer based on the total number of, total time available for you, the length of the question paper. Sometimes question paper can be very much lengthy. It takes so much of time to answer accounts. Okay, that time theory you can just little reduce accordingly. But in normal case, reasonable explanation is not there. I will give you only 4 or 3 for 10 marker. Okay, reasonable explanation is there, 8. Extraordinary explanation is there, 9 mark. 10 mark is not always there. That 1 mark is for me. Okay, I won't give you. Anything else I forgotten? Yeah, take all the chapters downloaded from LMS, and also you can take from 11th standard and 12th standard textbook. You can rely upon that. Even for the balance sheet and the P&L account, the same format it is there. You can rely upon on that. NCRT website, go to accountancy textbook. Okay, after downloading, check for your syllabus. It contains so many aspects. We are not concerned about all those things. Whatever we discuss in the class, it is there in the LMS syllabus. Only those chapters you tick and study that. If there is any doubt, if it is required, I am ready even for one more online class for doubt clearing or giving some more support on your preparation, on your demand or request anytime before your 11th, exam starting on 11th, no? Yeah, 12th, okay. 12th is accounts exam. 11th is some more exam is there, I think. Yeah, so before 11th, if there is any required, if you all, some 2 or 3 also requiring, we can organize that either by officially or even by personally or unofficially also. Okay, anything else you forgotten? No, important question or chapter and preparation. It's going to be offline exam, no. So please come in time. That's also again matter. It's not like your office. You can go at any time and giving 1 hour permission or 2 hour permission. That is not available in the exam. Come in time and write for 3 hours or 2 hours, for example. 3 hours. So write for 3 hours. Reasonably, you should be okay with all the chapters because question paper is spread across all the chapters. Okay. Now you can read between the lines whatever I given you some important questions in your words, and you can find out if you are more clever. You can go with that, but you have to face the risk. If anything is not read correctly, I told everything correctly only. Okay, thank you so much. Thank you for the class participation and all the very best for your exam. If time permits and system permits, we can meet again officially. Otherwise, bye. Thank you. Those are online. Can I close the session or anything else you want to ask?
Sir, previous year's question papers are not uploaded in so that we can
Question
just
paper,
refer.
okay. Model question paper or previous year question paper in LMS, it is not there.
2020 papers are there, sir. Only 2 papers are
I'll
there.
tell the office to upload. I don't have question paper. I'll tell the office to upload. Otherwise, I'll check the answer script when it is coming for valuation. I might have received a question paper. If it is there in my mail, I will just put it in WhatsApp group or I will upload in the LMS.
Okay,
Please
sir.
remind me if it is not done in another 1 or 2 days. Okay, you take care of that. You remind me if it is not done in another 1 or 2 days. Okay, madam.
So how do I remind you? What is the point of contact?
No, in the WhatsApp group, I am there now.
Okay, sir.
Email ID I will share with you in the group.
Okay, sir.
Thank you.
Yeah, thank you.
This one, they will have it, but madam is this file. I think it is not there in the LMS. This one only. Ratio is there, no? Ratio is there. Okay, LMS is opened. It's not changing.